What is up, guys? My name is Hassan and welcome back to another dividend investing #good investing. As you guys know, recently Warren Buffett bought gold, or at least shares of Barrick Gold. Today I'm going to give you guys a stock analysis video on Barrick Gold, which you guys can see right here. It's currently at $29.25. So I quickly want to go over this article. It says Warren Buffett goes for gold and sells major banks. So we can see here, Berkshire Hathaway, $506 billion company, recently bought shares of gold, or at least a company. Despite having more than $130 billion in cash value, two portfolio managers, Ted and Todd, decided to only buy one stock in the last 3 months, and which was Barrick Gold. So a lot of people were saying that Warren Buffett actually bought Barrick Gold, but that's actually not true because it was his minions or his two portfolio managers who were doing that. But at the end of the day, it's Berkshire Hathaway. So we can see Barrick Gold. So we're going to give you a stock analysis on Barrick Gold, ticker symbol GOLD. This is actually one of our better gold mining companies out there, a solid company with a great profit margin, and more importantly, they have a crazy net income margin. So I'm going to take you guys to Seeking Alpha, and I want to show you guys their profit margin. This is one of the reasons why I think they chose Barrick Gold, or why you should take a look at it. So we're going to click on Profitability. So here we can see Barrick Gold, their gross profit margin is around 33%, which is like a B+. But more importantly, their net income margin is around 39 or 40%. I would rate this A+. This kind of income is made by tech companies. So Barrick Gold is actually killing it or destroying it. They're earning so much money that they don't even know what they're going to do with it, because they're going to do, first they're going to take care of all their expenses, pay off their debt, give back money to shareholders. Well, 39%, you could do a lot of things. As you guys know, I'm not a big fan of gold because gold doesn't really produce anything. All it does is look shiny and look pretty for us. It doesn't create any value. Instead, I like to buy into these gold mining companies. As always, before we continue, I have to give you guys a quick disclaimer. I'm not a financial advisor, nor do I know you personally or your financial situation. I'm not responsible for any of your gains or losses in the stock market. My suggestions are only suggestions. That does not mean you go out and buy these stocks. Nor am I here to certify if certain companies are halal or haram, or they're Islamically permissible to invest or not. For that, you guys have to ask your local scholar for that. This is just a place for you to start your own due diligence. Remember, just because I buy something, that doesn't mean you have to buy it. Another disclaimer that I want to point out there for you guys: all the information that I present to you guys are not mine. I get them from other people, presentation videos, books, articles, 10Q, 10K, their website, all the research I do, and you guys will see it how I do my research right now. As always, just remember that make sure you hold yourself accountable before you invest in any company. Before we go deep diving into our Barrick Gold stock analysis, I quickly want to show you guys my portfolio. In that way, you guys are able to hold me accountable as an investor. I'm not a person who only talk about investing. I actually do it. So this is my Robinhood portfolio. I currently have $24,300. If you look at it for one day, I'm down about $124. If we look at it for 1 week, I'm also down by $180. And if we go for 1 month, I'm up about $1,400 or 6.3%. If we look at it for the last 3 months, I'm up almost 20%, or I'm up 20%, $4,100. And then if we look at it for the 1 year, I'm up about 17%, or 3,500. Another thing to keep in mind is that I have a dividend portfolio, which you guys can see on the right. Most of my companies have one thing in common, and they all pay a dividend. And here, even though it's 17%, I actually get another additional 3% in dividends. So roughly for the last 1 year, I made about almost 20% in total income, or increase in my portfolio valuation. If you guys follow somebody, they should be able to prove their holdings, or show you guys their track record. So another thing that I want to point out to guys, that I currently have a little bit less than 1 share, or 0.85. It's a fractional share. So the only reason I bought this almost 1 share is because so I'm able to watch the company moving forward. And the disclaimer that I have no idea if I'm planning to buy Barrick Gold or not. I'm just doing my research, and maybe in the future I might buy more, or I might get rid of this one share that I have. And if you guys check out my other videos, you guys can actually see all my holdings, or the 38 or 35 different companies that I have. But today we're going to be focusing on Barrick Gold. So guys, if you haven't made one of these accounts with Seeking Alpha, it's free. Make sure you guys do so. We're under overview. So pretty much Barrick Gold is a corporation that engages in exploration, mining, developing, and production of gold and copper from the ground. So pretty much they have location in Argentina, Canada, Dominican Republic of Congo, Mali, New Guinea, Tanzania, and the United States. So pretty much they're very well diversified. They're a massive company that are producing, mining, and producing gold and copper all throughout the world. So we're going to go back to Yahoo Finance. We can see that current price is around $29 and they have a market cap. So one of the first things I like to look at before analyzing a company is how much is the market cap, how much is this company totally worth. If I were to buy this whole company all at once, I would have to pay 51 billion or 52 billion dollars for this company. That's what the market cap is, how much the company is totally worth. So this 52 billion market cap is actually a huge, massive gold mining company. At one point, this was actually one of the biggest gold mining company out there. Still, they do a lot of things and they're pretty big. So another thing I want to point out is PE ratio. Currently, they have a PE ratio of 11.7 or 12 PE, which is relatively cheap compared to its peers. In my previous video, when I did an analysis on Kirkland Gold, I actually went in a little bit in depth about the PE ratio. So I would say that PE of 12 is relatively cheap, or it's a good value. Another thing that I want to point out is that earning per share EPS, they're making $2.50 in annual earning per share. Another thing that I want to point out is their dividend yield. Dividend yield is mostly about 1%. So this 1% is actually not a lot, but in the long run, it actually adds up if they actually continue to grow this dividend of 32 cents per year in annual payment. Another thing, we can see that the company is making $2.49, but they're only giving out 32 cents. So you can see that their payout ratio is very low. That means that they actually have a lot of room to increase this. And this is pretty much a healthy payout ratio, meaning they're not giving more than they are earning. So if we look at their stock chart, we can see that for the 6 month, very nice growth. We can see that 6 months ago was around $21. And then if we look at it for the 1 year, has been growing nicely and massively. And then if we look at it for the 5 years, amazing growth. We can see that this graph, the company is doing well. It's actually at an all-time high. So I'd be a little cautious, but I see gold increasing in price and continue to do well. Even though it's $29, I see it way above $29, $30. And you can see that this in the last 5 years it did really well, and I'm pretty sure it was beating the market. We're gonna go back to Seeking Alpha and look at their overview. So they have 1.7 billion outstanding shares, which is actually a lot. In terms of valuation, again, a PE ratio of 12. They have no PEG value. They have no PEG or PE, price to earning over growth ratio. So this is blank. So since they don't have a PEG ratio, we're actually going to look at their cash flow. So another important thing that we like to look at is their price to cash flow. How much are they generating in cash? And we can see that the price to cash flow right here is around 14, which is a solid or great number. So now I want to go a little bit more in depth with this cash flow. So PE, as we see it right here, PE is probably the most common ratio in determining whether a company is undervalued or overvalued. However, price to cash flow is another great ratio to do just that. So I'm going to pull up my notes. We can see also, like the PE ratio, more importantly, cash cannot be manipulated on the income statement like the earnings can. So a lot of times PE ratio is actually misleading because a company can do a lot of engineering and to increase or decrease this PE ratio. But however, the amount of cash that they're getting, they cannot change that. They cannot manipulate it. That's why looking at the price to cash flow is very important, as just as looking at the PE ratio. Also, like the PE ratio, the lower the number, the better it is for our price to cash flow. Currently, the average price to cash flow for stocks in the S&P 500 is around 14. As we saw, Barrick Gold also has a price to cash flow around 14. So based off of that, we can definitely see it is a fair value, if not, or a bargain. Based on my understanding, price to cash flow between 0 to 10 produces the best result. The second best results come with the range from 10 to 20. However, once you get over 30 for price to cash flow, it gets problematic. So price to cash flow of 14 is a fair or great number or great value. So if you guys made it this far, make sure you guys like and subscribe to the video. So now I want to take you guys back to our Barrick website. One of the ways you guys can reach the Barrick website is if you guys go back to Seeking Alpha and under financials and then overview, and then we can click on barrick.com and it'll take you to their websites right here. And we can see their websites automatically. They're showing us our Q2 2020 results. The website looks very neat and clean, very well organized, shows you guys some pictures and provides some disclaimers and going over some key important data. So I want to point out a recent event that took place in Barrick Gold. So we're going to click on their website here, and then we're going to go on down, scroll down. We can see that Barrick declares dividend. So we're going to click on it to see what they have to offer. We can see here Barrick declares dividend. Today, on August 10, they declared a dividend of 0.8 cent, which is an increase of 14%, which is a very positive sign that the company outlook is saying that they're going to do well. They're going to be making more money. More money means more money back to the shareholder. So if they're increasing their dividend, that means for the most part, their company is growing and it's at a healthy state. So this is a very positive news that they're increasing at a 14%. So just think of this, if you were a Barrick shareholder, you just got a raise of 14%. There's nobody who's in the workforce is going to give you a 14% raise. So this is one of the cool thing about dividend investing is that our dividends will grow year after year, a lot of times higher rate than what our job has to offer us. So we're going to go back to the website and we're going to go down here. So pretty much under operations, they're saying that our portfolio is primarily focused on high margin, which we talked about, almost 39 or 40% of high margin, and they're looking to increase their lifelong gold operation all around the world. And I'm going to click on it to read more to see what else they have to offer. We can see here their global operation right here. It has two parts. So they have gold and then they have copper. Majority of their income comes from gold. We can see that their 2020 forecast is for 4.6 million ounce to 5 million ounces of gold, which is actually a lot. Another thing that I want to point out is their cost. So currently their cost is around $980 to $1,000. It costs them almost $1,000 to retrieve or get this gold out of the ground and process it, and they can sell it. Gold prices around $1,900 or $2,000 an ounce. So they could pretty much sell it for double what it is costing them. Again, they're forecasting around $920. So this $1,000 is relatively, I've been analyzing a lot of gold company. $1,000 per ounce is actually a very low cost, or actually a good price to get gold out of the ground. Another thing I want to point out is that they have copper, which is second part. So copper is costing them around $220 to $250 per pound. So historically, this is actually a high number. But before we get to the copper, I want to do some quick math. So we're going to pull out our calculator. Here we're going to do 4.6, or just for the sake of math, we're going to do 5. So this is about 5 million ounces, and we're going to multiply it by, say, $1,800 per ounce, which is actually lower. We can see that, and we get around, is producing them in $9 billion in revenue for the year of 2020. So we're going to go back to the Barrick, and we can see that their revenue here was around 11.3 billion for the last 12 months. And here we're projecting according to our calculator, forget about copper, just in their gold prices around $1,900, $1,800, they're producing $9 billion in cash revenue. That's not even me calculating or using their copper value. So this shows that the future outlook, if the company continues to stay at this rate, they're going to generate huge amount of cash flow, paying off debt, reinvesting, giving back to shareholders. It is a very strong sign if the copper or gold stay around at this price. Now I want to pull out to the copper. We can see here 500 million copper at. So if we look at the copper prices historically, we can see here today, August 20th, copper is around almost $3 or $2.97, $3 per pound. So we're going to again go back to our website. We said we calculated 9 billion. So we're going to do, we have 400. So we'll just go estimate it low. We'll clear this out. We're going to do 450 million, and we're going to times it by 2.97, and we get around, again, we get another 1.3 billion in revenue of copper. So in copper, we can see that they're really not making much, only 1.3 billion compared to their gold of 9 billion. A really important thing to understand that recently, copper has increased its price. It actually reached or broke $3. We saw in our previous window that it takes them, or it costs them $2.50 just to get this copper out of the ground. So anything above $2.50, the company is making money. So we can see here the copper is around $2.97 to $2.80. So if copper prices stay above $2.50, this company is going to be making money, and they're going to be continuing to, even if they're not growing, they continue to generate huge amount of money. So we can see here the copper prices for the last 10 years or last 5 years has been going down until 2016. It bottomed off. Now it's on a upward projection. So even if it stays around $3, and because of inflation, I'm pretty sure it's going to stay above $3, we're going to do well. So guys, if you guys made it this far, make sure you guys like and subscribe to the channel. It will help my channel grow, and I'll be able to reach out and help and benefit more people. Remember, in the investing world, we're all on the same team. We're not against each other. This shows their revenue of 9 billion, another 1.3. So around 11, again, we should expect them to see around 11, 12 billion, or their revenue to stay around the same, which is a very positive sign, because in 2019, they made huge amount of money, almost 40% in gross profit income. So we're going to go back to Seeking Alpha. This is one of my favorite websites because they break it down for you in an easy manner to understand. We're going to go back to the financial statements. We're in the financial statement, and under the income statement, here's the revenue. If we look at it here, we can see here in 2015, they produced around $9 billion in revenue, but in 2019, which was last year, they also produced 9.7 billion. So this is a little bit problematic, because we can see here 4 or 5 years have passed, their revenue hasn't really increased. So normally we actually see the price, their revenue was actually decreasing, but 2019 they actually made a lot more because of the gold prices. Even if the market or gold prices stay at this price, they're actually going to do well, because of 9.7 is a lot of money compared to or their current liabilities. So here we can see it decreasing and then increasing again. So, but I do expect the price of gold to increase. So that means higher price of gold, higher revenue. So another thing I like to look at is their gross profit. Just because their revenue is increasing, is their profits are also increasing. So we can see here it's a little bit choppy. It's increasing, decreasing, and then increasing again. So if gold prices continue to increase, this company is going to do really well. So another thing I want to look at is their interest payment. As a Muslim, we have to take a consideration. Here we can see that their interest payment is actually decreasing year after year, which is a positive sign. Normally, we should invest in any company that has their interest. If we look at it, 2019, they paid about 400 million in interest. It actually should be zero. It should not even be 400. But on the positive note here, it's decreasing year after year. So normally we want to go for companies that have zero debt, zero interest. And this is one of the main reasons why I'm not investing into this company, is because of this payment that they're paying out. I did a video analysis on Kirkland Gold, which has zero in long term and short term I think that's a way better company than this. They're both good. They're both making around 40% in profit income. But if I had to choose one of them, I would definitely go with Kirkland Gold. But remember, even with this company, it's a solid company. So here, if we scroll down, we can see their dividends or their payout ratio is relatively low, 13.8, not available, 13.10, which is good. They're not increasing their payout ratio. So now we're going to go on to their balance sheet. So one problematic we found out about their income statement was that their revenue hasn't been growing. Only reason their revenue has been growing in 2019 and 2020 is because of higher gold prices. So next thing I like to look at is in their balance sheet of their cash or cash equivalents. So we can see that in 2015 their cash equivalent was 2.5 billion, 2016 2.4, so it's decreasing, and then in 2019 their cash equivalent was around 3.3 billion. In 2020 they're almost at a 4 billion in their cash. So their cash has been decreasing and then due to gold prices increasing again, which is, I would say, fair or okay because the gold price is up, and when in commodities, if the prices are good, everybody's having a party. If prices are down, things are getting cut, people are losing job. So I think that with the Fed printing money like crazy, I think gold prices staying high is here to stay. Next thing I like to look at is their total asset. Is their total asset increasing or not? Total current asset, again, same thing. It was decreasing and then starting to increase again. And then if we're going to look at their liabilities, for the most part, it was decreasing, which is good. And then it jumped up. And I'm going to talk about why this jumped up in a bit. Now I want to talk about the total current liability because this number right here is very important. And before we show you guys or talk about the current liability, I want to quickly calculate our current ratio. So if we go back to our Barrick Gold and pull out the calculator, or 1800, so just to simplify the math, we're going to just say liability is 1.8 billion or 1800, and our current asset 6.9 billion. So we're going to pull up our calculator. 6,919 divided by 1811, we get around a current ratio of 3.8. 3.8 is very financially healthy company. So before we continue on, I want to talk about why this number is so important, why this 3.8 matters. Why did I keep bringing this number again over and over again in my videos? Because it shows the financial health of a company. So we're going to go back to our notes. So the total current liability or current liabilities are a company's short-term financial obligations that are due within 1 year. So that includes how much rent they have to pay, the accounts payable, their expenses, their debt, their dividends, any loans or any insurance that they have to pay. So pretty much this current liability is amount of money that has to be paid out. So current ratio of 3.0 or current ratio of 3.8 shows that Barrick is a very healthy financial company that they can run for the next year or 2 or 3 years at a healthy state, even if they're not producing any revenue. So they're financially very healthy. This shows that any obstacle they get, they can withstand it and move forward. As an investor, I like to have a well-run company. And this shows that the management is actually doing a very good job. They're keeping a healthy balance sheet. So I want to go back to their income. So we're going to go back to Barrick. So I like to look at their income because that's a very important number. Their net income in 2014 was 4 billion. Even though their net income hasn't been too great in the last few years, we can see here it's very choppy up and down. With the current gold prices around $19 or $2,000, I see the company doing really well moving forward. In 2019, they produced 4 billion. In 2020, I expect them to produce almost $4 or $5 billion in revenue. If gold prices could stay around this price, we're going to do well. And the CEO, with all this money, the CEO of the company already said that they plan to do a lot of acquisitions to buy up all these junior mining company because they have a lot of revenue, they have a lot of income. In the long term, I see them moving away from their debt. Another thing I like to look at is their common outstanding shares. So we're going to go back to the balance sheet. Is the total common shares outstanding, which is right here. If I'm buying more shares, am I getting a bigger piece of the pie, or my shares are getting diluted? And that is very important to look at. The outstanding shares are around 1.2 billion, and it's relatively flat. But all of a sudden, in 2019, their outstanding share price increased to 1.8, which is a little bit problematic because my share just got heavily diluted. But again, I'm going to look at the book value again here. We can see that in 2000, the book value increased $12.05 per share. Here, 2018, 17 it was around $6, $7, but all of a sudden, in 2019, their book value increased to 12. So this shows that even though the shares were diluted, they probably did a major acquisition, which is fine because if they're doing acquisitions, I'd rather have them do it through shares instead of adding more debt. Another thing I want to look at, again, this is one of the main reasons why I would want to invest in this company, even though the interest is problematic as a Muslim investor, but their debt is decreasing. So hopefully, eventually, it'll go down to zero and be a better, well-run. So guys, if you guys made it this far, make sure you guys like and subscribe to the channel. I really appreciate it and help my channel grow. Before we continue, or before we end the video, I just want to make a closing remark that we saw this from this analysis that last few years for Barrick Gold wasn't going too well for them. 2019 and 20 was great. This was mostly due to higher gold prices. And we can see that Warren Buffett purchased this company, or at least shares of it. He expects the company to grow, or at least the gold prices to stay high or even increase. If the gold prices continue to increase, their 40% profit margin might increase to 50%. So this is crazy amount of money, and I can see why he purchased this company. Another thing is that I did an analysis video on Kirkland Gold. However, that was too small of a company for him to invest in. As always, guys, thank you. Make sure you guys subscribe, like the video. As always, see you next time.